Hello traders, Dwayne Chapel here from Sync Trading Master. So, gonna be taking a quick look at the trade that was made recently on this pair, the pound Japanese yen, which took advantage of two consolidation setups that were formed on the daily chart and the 4-hour chart. Now, starting off with the analysis in terms of the daily chart, generally tend to like to squeeze the chart until I see an extreme low or extreme high to be able to accurately identify the trends on these charts. So starting off with daily chart, going all the way down to, what is this, 2020 to find the long-term uptrend line, and then drawing trend lines that would have been formed along the way to identify the current market direction. So as you can see, this trend provided these two long-term uptrend lines, and then more recently you can see where the market continued the uptrend with an inner uptrend line. So zooming out, we're going to be able to take a look at the situation more recently. Just adjusting this line a little bit. And what you'll be able to see is that the market started to pull back a little bit here and then move sideways in a pennant consolidation pattern. Now what was taking place before the trade was that the market had already formed these 2 points of resistance to create this resistance line, resistance boundary, and it had already formed this first support point at this area here, but was in the process of forming the second support point. So even though you can see here that the market has now broken above the completed consolidation setup in the form of a pennant, right here was where the market had just started to rally to indicate the possible formation of this second support point. So as it was at this area here where the market provided me with this bullish candlestick signal, it was in the process of completing the move that would take us up to the resistance boundary to, technically speaking, complete the formation of the pennant setup. So this was the signal that was given. Just adjusting this line here. This signal was initially given, but it failed to actually start the move, pull back a little bit, and then U-turn to provide us with this strong bullish candlestick signal. So this essentially was forming what we call an ABC signal, ABC candlestick formation, which is one of the more popular signals that indicate the start of aggressive movements. And as you can see from what has taken place here, the market has responded accordingly. Sharp rally, bullish, very little pullback, which is in sync with what normally takes place when the market provides us with these types of signals. So a strong ABC signal that led to the formation of the second support point, led to the rally that took us to the resistance boundary to complete the formation of the pennant consolidation setup on the daily chart here. So the idea was to take advantage of this expected rally by looking at a formation, looking at signals and patterns on a 4-hour chart that would allow me to take advantage of this expected rally. So going down to the 4-hour chart, as part of this ABC signal that was formed on the daily chart, the market also formed a pennant. Well, actually, let's see here. This was actually a channel, a downtrend channel on the 4-hour chart. Well, I think this was actually, this was actually a pennant with a horizontal support boundary and a completed resistance boundary. So this was a pennant. So this was a pennant consolidation set up on a 4-hour chart, and the idea was to, I believe that when the market had formed that signal on the daily chart, this was what had been seen. The market had already broken above the resistance boundary, and so the assumption was that the market was going to be completing the move to take us up to the resistance boundary. Now, even though this was the ultimate target, what I identified was that there was an intermediate target before it actually hit the resistance boundary. So this target is actually based on the consolidation setup, and it represents the breakout target of the pennant consolidation setup. Now, in some cases, the market would actually pull back after hitting the trading target, the breakout target of the consolidation. But in some cases, as was the case here, the momentum of the market or the strength of the signal on a higher time frame could be such that it will be stronger and therefore would lead to a breakout beyond the breakout target of the smaller consolidation. So the idea was, nevertheless, despite the fact that it was going to ultimately go towards the resistance boundary and provide even more trading gains, the conservative approach was to actually take my trading gains and take the profit at this area here. Really and truly, the main reason is because of the uncertainty as to what the market is going to be doing at this area here. The better approach is to assume that the market is going to pull back and then look for another opportunity to trade the market continuing in this direction. So it's a conservative approach to take profit, given the possibility that the market would actually pull back sharply before actually continuing its movement bullish. So that was the gist of the setup and the trade that was taken on the daily chart and the forward chart of the pound Japanese yen earlier this week, taking advantage of the small consolidation setup on the forward chart within the context of a larger consolidation setup that was being formed on the daily chart.